Hey everyone, today I just want to go over 3 stocks I'm watching for the month of September. All 3 stocks have pulled back recently and look interesting for an initial starting position. I do have a position in all 3 of them currently, but we'll be monitoring them closely going forward. But first, as a disclaimer, I just want to say I'm not a financial advisor, so please do your own due diligence before investing. The first company I like is Activision Blizzard, which owns 3 subsidiaries: Activision, Blizzard Entertainment, and King Digital Entertainment. Some of the company's more noticeable franchises include Call of Duty, World of Warcraft, Diablo, Starcraft, Heartstone, Overwatch, and Candy Crush. With a closing price of $72.10 on August 31st, 2018, it brings the market cap of Activision Blizzard to $54.97 billion with a high PE ratio of 42.66. It also pays an annual dividend yield of 0.47%, which is very low even though they have been increasing it year over year. When we look at their revenue, we can see a big jump in revenue between 2015 and 2016, which was due to the acquisition of King Digital Entertainment in 2016 for $5.9 billion. But overall, we see the revenue increasing, but nothing drastic. Same with the earnings per share, we see a steady increase. Let's take a look at the chart now. If you recall from a video I made on Activision Blizzard a couple weeks ago, I had the same channel line as I do now, and I was expecting a bounce in this area where we see the channel line and a 200-day moving average providing support. On top of that, we can also see a stochastic divergence happening, which gave me even more confidence in the trade. And from that, we saw a nice bounce in the stock price, almost up to the $76 level. But on Thursday, August 30th, Electronic Arts pushed back the launch date of their new Battlefield game by 4 weeks and further lowered their guidance from $5.55 billion to $5.2 billion. EA did this so they could have a little more time to further make some final adjustments to the game, but also to get out of the crossfire from the releases of the new Call of Duty, Black Ops 4, and Red Dead Redemption 2. The following day, Bank of America cuts Electronic Arts from a buy rating to a neutral rating and downgrades Activision Blizzard from a buy to a neutral and lowers their price target from $84 to $77. But long term, I'm still bullish on the company because of esports, with Activision Blizzard really pushing for esports with their franchise Overwatch this year. I think this would be a good catalyst for the stock price to continue its bull run. Esports is still fairly new in its even stages, and with a growing audience in esports, it can represent a significant opportunity for Activision Blizzard. The second company I'm going to be watching closely is JD.com, which is one of the 2 major e-commerce companies in China behind Alibaba. But there are key differences between Alibaba and JD, where JD handles most of the fulfillment and logistics themselves, and Alibaba relies on third-party fulfillment and logistics. I believe this will give JD an advantage over Alibaba because they are able to more closely monitor their products and services, especially with China cracking down on counterfeits. But don't get this the wrong way, I'm not bearish on Alibaba either, but when it comes to the business and consumer marketplace, I give JD the advantage. And we can see this with JD gaining market share since 2014 to the mid of 2017. JD's share of the Chinese business consumer marketplace surged from 17.7% to 32.9%, while during the same period, Tmall, which is owned by Alibaba, dropped from 54.6% to 51.3%. And with all the partnership JD has, I'm sure they will gain more market share in the future. Some of the partnership JD has is with Tencent, which owns about 17.43% stake in JD. Tencent also owns WeChat, the top messaging app in China, with around 1 billion monthly active users. And with this partnership, it allows JD to integrate JD's marketplace into WeChat, and JD has only utilized around 10% of WeChat's potential. Walmart also handed over its Chinese e-commerce business to JD for a stake in the company, and since then, Walmart has further increased their stake in JD to 12.1% as of now. And more recently, Google also acquired around a 1% stake in the company as well, and 2 companies will work together to develop a better retail infrastructure, and this partnership would open a channel for JD to boost their products on Google Shopping. When we take a look at their revenue, we can see great growth over the years, with the number of monthly active users increasing year over year and the number of purchases increasing as well. When we take a look at the chart, we can see the channel is still intact, and I would expect a bounce from here. The stochastic could be setting up for a stochastic divergence, but overall the stochastic divergence doesn't look that great, so I won't be putting much emphasis on it, but we'll see how it plays out. One of the main reasons why I'm bullish in JD is because of the growing middle class in China. From 2001 to 2015, wages have grown on an average of 11%. Since the early 2000s, China's middle class has grown the fastest in the world, and we can see this trend continuing. And of course, with the higher income, we can expect higher consumption to increase as well, and it is expected to grow at around 9% a year through 2020. The third company I'm going to be watching is Facebook, which also owns Instagram, WhatsApp, Oculus VR, and some other smaller companies. With the closing price of $175.73 on August 31st, 2018, it brings the market cap of Facebook to $507 billion with a PE ratio of 27.2. Now let's take a look into Facebook's numbers. The number of daily active users has been increasing quarter over quarter. The number of monthly active users has also been increasing quarter over quarter. revenue has been growing around 40 to 50% year over year, which is just insane the rate Facebook is still able to grow its revenue. And we've seen some insane EPS growth from them as well, but it looks like it's starting to slow down a little bit. The reason I'm keeping my eye on Facebook is because of the massive drop on earnings. They beat the EPS, but they missed on the revenue. And if that wasn't bad enough, they came out and said they see the growth rates dropping by high single digits for the next couple of quarters. The market really punished them for that, and the stock dropped around 20% that day. And there is a good reason for that, because the number of active users are growing slower than what the analysts are expecting. And if we take a close look at the daily and monthly active users numbers, we can see the growth will soon be tapering off. If we take a look at the chart again, but this time I'll graph the percentage growth on top in red, even though the numbers of active users are increasing, we can see the growth really taking a nosedive this quarter. But what's even worse is the growth rate of the United States and Canada are what's slowing down the most. And with US and Canada being the most profitable segments for the company, it's not good news. Even though Facebook's growth is slowing down, Instagram is still growing rapidly and currently has over 1 billion monthly active users and could be a significant driver of growth going forward. Also, Facebook is starting to monetize WhatsApp with their plan to start charging businesses for sending messages to their customers, and with WhatsApp's 1.5 billion monthly active user base, we'll see in the future if Facebook is really able to successfully monetize WhatsApp. On top of that, recently Facebook has launched Facebook Watch globally, and we'll see if that's able to bring any significant revenue for Facebook. So even though Facebook has been facing a lot of scrutiny and additional regulations regarding their user information in the US and abroad, there's still room for Facebook to grow their other segments, and we'll see if they're still able to really monetize it successfully going forward. I'll be doing a more in-depth video on Facebook in the future, but I can't deny that the stock doesn't look interesting at these levels, and we'll be watching it closely. Let me know in the comment section below what stocks are you watching for the month of September. And as always, if you enjoy the video, please hit the like button. It really helps out the channel. And if you haven't subscribed yet, please make sure to smash the subscribe button. And thank you for watching. I'll see you guys in the next video.